Here, the elementary trading algorithms obtained by checking intraday breakouts, that is, whether the price is above or below the overlay, are described. In this case, the overlay is the base indicator. The elementary trading algorithms derived from the breakouts of the overlays are moving average of base indicator upside breakout, moving average of base indicator downside breakout. Trading Conceiver considers an upside breakout to occur when the price is above an overlay. Conversely, a downside breakout occurs when the price is below an overlay. The check is made intradaily, not only at close, so these algorithms are known not only at close, but throughout the day from open to close, that is, intradaily. This is the reason why we call the period between open and close excluded threshold instead of intraday. During the threshold period, we usually check for thresholds or levels breakout. The threshold phase does not include the open and the close. At open and close, the price is univocally defined, while during the threshold we have a full range of values. This definition is even more appropriate considering that the bars of the historical data don't necessarily represent days, so breakout algorithms are known at open, threshold and close. Strictly speaking, the breakout is only when the price moves above or below a certain level. So, for instance, the upside breakout refers only to the moment when the price passes from below to above the overlay. If you want to adopt this stricter definition, select the Step checkbox of the breakout algorithm. As all algorithms active intradaily, they appear in blue in the composer tree. When inserted in one of the slots through the selection buttons, an eye appears signaling that. Overlays are recalculated at close, therefore they can change their value only at close. This is true even if price values other than close are used, as selected in the Indicators tab, in the For Price Use pane, because they are all quantities known only at close, not during the day. The rationale behind comparing the price with the overlay is to use the most recent datum available for the overlay. For this reason, the comparison is made through the following quantities. At open, open price versus overlay calculated at close of previous bar. At threshold, upside breakout, high price versus overlay calculated at close of previous bar. Downside breakout, low price versus overlay calculated at close of previous bar. At close, close price versus overlay calculated at close of current bar. The overlay upside breakout algorithm checks intradaily whether the price is greater than the moving average of the base indicator, which is always an overlay. So the algorithm is true if and only if, at open, open greater than moving average of base indicator of previous bar. At threshold, high greater than moving average of base indicator of previous bar. At close, close greater than moving average of base indicator of current bar. The overlay downside breakout algorithm checks intradaily whether the price is less than the moving average of the base indicator, which is always an overlay. So the algorithm is true if and only if, at open, open less than moving average of base indicator of previous bar. At threshold, low less than moving average of base indicator of previous bar. At close, close less than moving average of base indicator of current bar. As explained and exemplified in the charts chapter of the manual, the correct way to chart breakouts is through the step-like option, not the standard one. This is exactly what we will do here. Traditionally, an upside breakout is traded opening a long position when it occurs. The advantage of the trading algorithms described here is that they operate intradaily, not only at close. For this reason, they act right away, without waiting for the close. They act faster, as soon as possible. This offers a great potential advantage to profits. If we select, for instance, the Emeovo-Duncan channel upper line upside breakout algorithm and chart it, we can see in this example that the price breaks the overlay level during the day. The algorithm signals that intradaily, without waiting for the close, where the price is higher. When opening a long position, the lower the price, the better. By acting intradaily, an extra profit is realized, equal to the difference between the closing price and the overlay level. The same considerations of the previous example hold when it is the opening price to break out. By taking the same algorithm as before, we can see here that the open is higher than the overlay level. The algorithm signals that starting at open, without waiting for the close, where the price is higher. This time, the extra profit is the difference between the closing and opening prices. As usual, if you want to act only when the actual breakout happens and not whenever the price is higher than the overlay, you can activate the step checkbox option. Here we have the same algorithms, without the step options enabled and with the step option.